I ask unanimous consent that all members may have 5 legislative days to revise and extend their remarks and include extraneous material on the resolution under consideration.
Without objection.
Mr. Speaker, I yield myself such time as I may consume.
The gentleman is recognized.
Mr. Speaker, I rise in support of this joint resolution of disapproval.
We ask all members, you can take your conversations off the floor where we're going to conduct the business of the House.
Mr. Speaker, I rise in support of this joint resolution of disapproval that would nullify the Office of the Comptroller of the Currency's final rule that makes it more difficult for banks to merge and merge in a healthy way. That's why I introduced the House companion, H.J. Res. 92. Today, we have the opportunity to prevent future administrations from issuing arbitrary rules on mergers and acquisitions that lack robust cost-benefit analysis and would make it significantly harder for financial institutions to grow and compete. Banks in the great Commonwealth of Kentucky and throughout the country are facing challenges in managing the high costs of complex regulations. Furthermore, customers now demand advanced technological features such as mobile and online banking, which require substantial capital investments. Mergers often present the only viable path for these institutions to keep up with these regulatory and technological costs and continue serving their local communities. They also play a vital role in ensuring the safety and soundness of the financial system. By enabling stronger, well-managed institutions to acquire weaker ones, especially those struggling due to local economic conditions, we can prevent bank failures and the panic that they cause. Instead of making it harder for banks to merge, we should be eliminating outside obstacles to mergers, enhancing competition and innovation, and ensuring that Americans, especially those in rural and underserved communities, retain access to physical branches with employees who understand their local economies. That's why I introduced H.R. 1900, the Bank Failure Prevention Act, which includes a shot clock to ensure timely decisions on merger applications. Mr. Speaker, I come from Kentucky. It's a basketball-crazed Commonwealth, and we care about the shot clock. Well, we should care about the shot clock on merger applications as well. My bill would restore fairness and predictability, preventing delays and giving banks the stability they need to focus on serving their customers and growing their businesses. The Bank Failure Prevention Act will help community and regional banks thrive in today's competitive environment, providing for a shot clock on the review of those merger applications, providing better outcomes for consumers. I look forward to marking up this important legislation in the House Financial Services Committee this week. The OCC's merger rule under the Biden administration would have taken us in the exact opposite direction. It would have upended decades of precedent by shifting the burden onto banks to prove their merger should be approved, rather than requiring the OCC to demonstrate how the merger conflicts with statutory factors. This would be fundamentally unfair, increasing confusion for banks seeking to merge and massively increasing the delay on the pendency and review of these applications without any kind of deadline on the review. Additionally, the rule would have abandoned expedited review for mergers for small, well-capitalized banks. Before the Biden-era regulation, there was an opportunity for expedited review of healthy mergers when there's small and well-capitalized institutions involved. But unfortunately, because of the Biden regulation, this resulted in a much more protracted process. Expedited reviews are essential to avoid prolonged, costly merger review processes that hinder banks from maintaining their employee base or investing in technology. Instead, long, drawn-out application processes create an environment of uncertainty due to regulatory delays, even when the proposed transaction is relatively simple. At the end of the day, Mr. Speaker, consumers are the ones who are hurt most when their banks are caught in limbo and forced to devote resources to navigate the merger process instead of enhancing their own products and services. The Democrat-led OCC rule was driven more by a progressive ideology against mergers in all sectors of all kinds in the economy rather than sound, rational policymaking. In fact, the Biden-Harris OCC did not even coordinate with the other banking regulators, such as the Federal Reserve Board, before issuing this final rule. Creating different merger rules for banks with different charters would add significant ambiguity for both banks and their customers. Thankfully, the current OCC under President Trump has recently indicated they will abandon this flawed rule. However, without this Congressional Review Act resolution, there is nothing to prevent a future administration from reintroducing this damaging rule that would prevent healthy, beneficial mergers from occurring. Community and regional banks, as well as their customers, should not have to fear that the rules will change dramatically in a few years. Mr. Speaker, I can already anticipate the argument from my good friend from California. I know what she's going to say here in just a few minutes. She's going to say, look at the Republicans. They're supporting mergers of big, bad banks, and that hurts Americans. To the contrary, Mr. Speaker, allowing healthy mergers to prevent bank failures allows for healthy financial institutions to compete with the big Wall Street banks. If you want more competition for big Wall Street banks, you should support this resolution of disapproval because you're going to create stronger competitors to the big Wall Street banks. But if you oppose this resolution, like the gentlelady and the ranking member of our committee is about ready to do, she's defending the regulatory moat that protects big banks from real competition. The Democrats' opposition here are defending big banks without competition. And that's why I urge all of my colleagues on both sides of the aisle to support healthy competition to prevent bank failures and to disapprove of this unwise regulation from the Biden administration. I urge all my colleagues to support this resolution and prevent the regulatory whipsaw that has proven so detrimental for banking institutions and the American people who rely on them. I reserve the balance of my time.